So welcome to the US morning briefing, just headed through now the open on Wall Street. In terms of the US index futures, pretty much already flat on the session, with much of the expectation now ahead to the FOMC rate decision. In terms of some of the things that we have seen this morning, it's worth just recapping the Bank of England quarterly inflation report, which did initially see gilt futures spike on life. That was after the Bank of England did drastically cut their growth expectation to minus 5.5%, so starkly below the Chancellor Darling's expectation of a contraction of 3.5%. The BOE also indicating that CPI they foresee below target around 1.4% in 2 years, assuming market rate path and the current £175 billion in QE. In terms of their thinking in regards to the background work on that 50 billion purchase that was made, or the increase on the debt ceiling, that was because of downside risk to the CPI, according to the MPC board, who did also state that they're never convinced that any amount of QE is exactly right. At the moment, although gilts are off their best levels, we're still up around 30 ticks on the session at the moment, with cables still in minor negative territory. Taking a look then into the open on Wall Street, one of the notable movers is Macy's. Their Q2 EPS was reported pre-market, came in ex items at 20 cents, which was above the expected street estimate of 17 cents. Revenues broadly in line at 5.16 billion, however they did boost their forecast. Allied to that, Applied Materials also reported after market close yesterday. They had a Q3 non-GAAP EPS of flat. Expected was a loss per share of 8 cents. Revenues coming in at $1.13 billion against the expected 959 million. Looking elsewhere on the calendar, WTI crude futures were in minor positive territory at the moment. At the NYMEX pit open, seeing a bit of a rally. Did see pre-market the IEA raise its 2009-2010 oil demand forecast, citing a pickup in industry activity within China. So we're back up around the $70 mark at the moment. And then for the rest of the day, we'll have the oil inventory levels. They'll be due at 3:30 London time. And then the focus will be on the FOMC rate decision, where most analysts are expecting to be pretty much a non-event in terms of the actual interest rate to remain in the range of 0 to 0.25%. But they may signal a stabilisation in economic conditions, and participants will be looking out to see whether the FOMC keeps the $300 billion Treasury buying scheme on track to the end of September, when it is currently due to expire. However, they are likely to keep the door open for extra purchases should circumstance warrant. Again, that decision will be at 7:15 London time.